Welcome to Stocks to Watch, where we bring you the latest insights from company leaders to help you pick the best stocks for your portfolio. I am Munir Barazi, your business analyst and host, and today I'm speaking with Brendan Yurik, the CEO and director of Electric Royalties, a royalty company that capitalizes on the increasing demand for various commodities essential to the electrification of consumer products, such as electric vehicles. The company has an impressive royalty portfolio with various assets in the lithium, graphite, and copper spaces, among others. Electric Royalties is listed on the TSX Venture Exchange as ELEC and on the OTCQB as ELECF. Hello, Brendan. It's good to have you with us today.
Yeah, it's my pleasure. Thanks for having me on.
Absolutely. You're quite welcome. So let me start from the very beginning. You have 25 years of experience, including in advising junior mining companies and founding your own investment company. What motivated you to take on the role of CEO at Electric Royalties, and what is your vision for the company forward?
Sure. I just start off by I'm not actually 25 years in the business. That would be, I'm not that old, but I have been at it for 12 years, starting out in London with Endeavor Financial. And yeah, we've been at this for 5 years since we founded the company. We are a royalty company, like you said. We're focused exclusively on clean energy metals, 9 different metals which we target. And yeah, we've just signed a definitive agreement to basically boost our royalty portfolio up to 40 royalties. And we'll have another 31 assets that are actually optioned out to third parties, which will turn into royalties, we hope, over the next couple of years. So our aim is to be diversified, across a great number of assets, be up to about 70, and across all these clean energy metals as well.
So 25 years of combined experience, that is, and uh, it's a very impressive portfolio, very well diversified, and the royalty model offers many advantages over the traditional exploration mining model, which often requires several rounds of financing and high capital costs as well. And your portfolio is focused on advancing green energy commodities, and it's already generating revenue despite some interruptions. So how do you maximize shareholder returns at both the portfolio level and the individual asset level?
Yeah, for sure. So we're definitely focused on shareholder value. Myself and my family are very large shareholders, about 15% of the company. I'm personally, about 95% invested as the CEO. So we definitely have aligned interests. We've been very careful about where we deploy capital. The nice thing is in our space, we are really the only group out there for royalty financing for a lot of these different metals. So we tend to get in a little bit cheaper than you'd see, say, in the precious metals royalty space. And so that really is helpful. But we've got a number of royalties in our portfolio. One of our royalties, Battery Hill, we acquired that 3 years ago. They put out a PEA in the last kind of a year and a half here that showcases just that one royalty in our portfolio, about $7 million a year back to us once in production, and they had a 50-year mine life. So the nice thing about royalties, as you said, I mean, we don't have to put up any of the development costs, capital costs. We've had operating partners raise over $500 million to invest in our assets since we acquired them, and all of that costs nothing to us. And once they're in production, our operating cost is actually a $0 per unit basis. It's just cash flow that comes back to the company. And those royalties also cost us nothing to hold. So, essentially we've been building this portfolio. If we were just to sit here and wait and do absolutely nothing, at this point we see ourselves getting cash flow positive, the next 12, 18 months. And then, cash flow is ramping up significantly from there. At which point, we'd love to do a dividend in the future. And that's where, shareholders really start to benefit from them.
Yeah, absolutely. It's a very robust model, economically speaking, and it offers investors an access to an investment strategy as well, on top of all of those very promising assets. And I want to touch on some of the new royalties you mentioned just a few minutes ago. Electric Royalties entered into an agreement with 3 vendors Ontario Inc., Exploration Services, and Gravel Ridge Resources to acquire a portfolio of 18 royalty agreements and 32 lithium properties. So I imagine you've done a lot of due diligence on this acquisition or on this deal, and it ticked all of your boxes. Tell us a bit more about that.
Yeah, so this was a really interesting opportunity. It was a deal structure that we hadn't really seen before, and we have renegotiated this 3 times now over the last 5 months. So, we began at 126 assets. We've settled on 50 assets that we are going to acquire, and we've reduced the cash cost by about 75% on that since we first announced the deal back in November. So, yeah, we're very excited about this. We were one of the first groups to be active in the royalty lithium space. And we've got a number of advanced lithium royalties. We like hard rock lithium in Eastern Canada. And so, we already have a royalty on the Oche lithium project. That's, moving towards production. The JV partner, Piedmont Lithium, said they plan to ramp up production to their, planned at the end of 2024. And that would likely mean that Oche starts to come online and starts to pay out. So we have that royalty. We've also got a royalty on Seymour Lake. Feasibility studies due out later this year. They're planning production in 2026. It's set to be the first lithium mine to go into production in Ontario. And so, yeah, these are very complementary in and around those projects, really all the best lithium projects in Ontario. And so, yeah, we're very excited about this. Of the lithium properties that we're acquiring, 31 of those are already optioned out to third parties. And if you look at the actual option payments we expect back on those properties, it should pay for our entire deal acquisition cost. And so, yeah, it's a very, very unique, I think it's a very cheap way for us to be able to get exposure and build our exposure in that space. And it also has some revenue coming back as well, which has definitely been a focus for the last kind of year and a half, adding royalties that have cash flow as an element.
Yeah, I noticed that cash flow is very important to you when looking at those assets. And following this agreement, how many royalties or assets do you have in your portfolio? Give us a breakdown, if you will.
Yeah, so this would take us up to 40 royalties. I think I mentioned that. We'd have another 31 properties optioned out. We'd hope to become royalties over the next couple of years as groups make payments on those. But we've got a number of royalties this year. We expect to either come back into production or enter production. We have our Middle Tennessee zinc royalty down in Tennessee in the U.S., operated by Trafigura. Zinc prices are starting to rebound. The group has been putting a lot of money into the operation from a drilling perspective, looking to upgrade processing. And so we're hopeful that'll come back in production later this year. We also have our Panuta tin mine. We financed them twice last year. It's really Europe's only producing tin mine. If you can believe that, it's kind of crazy. And they've just been shut down from a permitting perspective. They're going through an appeals process, and we're hopeful that'll work out here as well, over the next few months. And then we also have our Oche lithium royalty, which I mentioned. Those guys have been ramping up production. The plan really is to start blending ore from Oche to increase that ramp up. And so we expect some good news later this year on that. And then our Graphmata royalty as well. The management team is looking to bring that back into production. It operated already for about 18 months continuously and shut down because of COVID restrictions in the country. So that's financing dependent, but another area we could see some good news on later this year.
So many exciting updates to wait for. And while we're talking about the future, can you tell us a bit more about your strategy or expansion plans? Is there a specific rate do you target, or does it depend on the assets you discover?
Yeah, so I definitely think we are more opportunistic than most groups out there. We're also one of the few royalty groups that's actually going around and creating new royalties. So that's where you create a new royalty, offer financing to a company to actually help develop their project and move it forward. And so that presents a really lot of unique opportunities, I think, for us. Our focus really for here moving forward is definitely going to be cash flowing, producing royalties. This transaction has some cash flow. It's a little bit different structure, but we're very opportunistic about that. We love the deal. But you're going to see a lot more sticking to cash flow for the next kind of 18 months, I would say.
Great. And I noticed that your stock performed quite well recently, even though exploration companies are struggling in general. It is a tough market. So, what factors, in your view, contributed to this performance, and why do you think the company will continue to excel throughout the rest of 2024 and beyond?
Yeah, well, I still see where we're at as grossly undervalued, but I'm probably a little bit biased as CEO. I think a lot of that has to do just with the portfolio we've put together. Now that we'll have 70 assets, that's a lot of groups out there. Developing them at no cost to us, moving them forward, and that ultimately creates a lot of value. A lot of the assets that we initially got into, we got in a bit earlier because it's really tough to be accretive and to buy assets that are already producing and be accretive when you're starting off. But a lot of those bets that we made early on, those assets are starting to come into production. And so as we get closer and they do enter production, I think that's a real big catalyst for the company. And so we should, see a lot of that happening over the next 12 months, along with, a lot of good news coming out on our other assets as well.
That is very encouraging and many exciting news ahead, certainly. Brendan Yurik, the CEO and president of Electric Royalties, thank you so much for joining us today and sharing all of those updates. We look forward to seeing you again here very soon.
My pleasure, and look forward to being back.